If you had 500k and wanted to build a steady income from the stock market, these are the 4 Nigerian dividend stock I'll tell you to buy and hold. These companies have one job, which is to pay you and keep paying you. Hello my colleagues, welcome back to the channel, and if you are new here, you are absolutely welcome as well. In this video, I'm going to be sharing with you 4 stocks in Nigeria that have not just been paying dividends, but doing it consistently year after year. Some of them have over 10% dividend yield, and a few are even underrated. So if you are looking to build passive income or just want some peace of mind in your portfolio, this list is for you. I'll break down their dividend history, why they made the list, and what I personally like or don't like about them. Quick disclaimer before we go further, this video is for educational purposes alone, not financial advice. Always do your own due diligence before investing in any stock, especially the ones I mention or recommend. Also, if you'd like to stay updated in real time with what I am researching, what I'm buying, or what I'm watching in the market, I share those quick updates first on my WhatsApp channel. You'll find the link in the description and the pinned comment section. Before we jump in, please smash that like button if you found value here. It helps more people discover this content. Subscribe if you haven't already, and do share this video with someone in your investing circle that needs to hear or learn from this content. Alright, without further talk, let's jump right into the video. Let's go. The first stock I have is Access Holding. Access Holding is one of the most reliable dividend-paying stocks in Nigeria, with a solid history of rewarding shareholders and an impressive 10-year average dividend yield of around 19.25%. If you are building a dividend portfolio, this stock deserves attention. From 2014 till now, Access has never missed a dividend payment, despite Nigeria's tough economic climate. The company has paid every single year, showing both resilience and commitment. There have been minor dips in 2015 and 2018, but since 2021, the growth has been remarkable. 85 kobo in 2021, 1 naira 50 kobo in 2022, and 2 naira 10 kobo in 2023, and now 2 naira 50 kobo in 2024. That's nearly 3x increase in just 4 years. Access pays dividends twice a year, an interim and a final dividends, which means investors get regular cash flow, not just annual payment. With an average yield of 19.25% over the last decade, 500,000 investments would return about 96,250 naira per year in dividends alone, while a 1 million naira investment would yield around 192,500 naira annually, assuming similar payout levels going forward. In 2023, Access earned 18 naira 04 kobo per share, and in 2024 it improved to 18 naira and 7 kobo per share, yet it only paid 2 naira 10 kobo and 2 naira 50 kobo in dividends in this respective year, which is a payout ratio of around 11% to 13%. This low payout ratio means Access has plenty of room to increase dividends while still retaining profit for expansion. Access Holding is no longer just a bank. Since its restructuring into a holding company in 2022, it has diversified across financial services while continuing to dominate traditional banking. It generates revenue from interest income from loans and securities, fees and commissions from digital and payment services, and even FX revaluation gains and other non-interest income. And with the current price that Access is trading at, there is huge room for you to profit also from capital appreciation. Overall, I would say that Access Holdings stands out as a high-yield dividend stock with strong fundamentals. With a 10-year average yield of 19.25%, it can deliver solid passive income while still growing its business. For anyone building a long-term dividend portfolio, Access is a name worth holding. Next up, we have UPDC Real Estate Investment Trust. This is Nigeria's largest REIT by net asset value. Over the last 10 years, it has built a reputation for consistently paying dividends with a solid average yield of around 18.24%. That level of yield means 500,000 investment could earn you around 91,400 naira annually in dividends. With 1 million naira, you are looking at around 182,000 naira per year, assuming similar performance continues. From 2014 to 2024, UPDC REIT has paid dividends every single year. That's consistency, but the payout has actually been quite volatile. It started strong in 2014, then dipped and hit a low in 2022 and has been recovering since then. That makes UPDC REIT consistent but not stable. Even at that, in years with reported losses like 2019 and 2021, it managed to pay dividends thanks to a 1 billion naira reserve account backing it up. UPDC Rights typically pays dividends twice a year, an interim which only had one distribution. Here's a look at how much it earned per share versus what it paid. In 2022, EPS stood at 0 naira 63 kobo. Dividend per share stood at 0 naira 18 kobo, which is like an 85% payout. 2023, EPS stood at 1 naira 42 kobo. DPS, which is dividend per share, stood at 0 naira 41 kobo. 2024, EPS was at 1 naira 76 kobo and DPS stood at 0 naira 50 kobo. It has declared a policy to distribute at least 90% of its net income to investors. Though the payout ratio dipped to around 52% recently, its cash payout ratio remains strong at 72%, which means the dividend is backed by solid cash flow. This also suggests that the right is now being a bit more conservative, keeping some reserves while still delivering income to their shareholders. It's worth knowing that UPDC rights earn from three main sources. One is rental income from residential and commercial properties, including student housing. They also earn from capital gains from selling properties at a profit. The third way they earn is through interest income from short-term fixed income securities. Interestingly, there have been years where interest income outpaced their rental income, showing that the right isn't just sitting on real estate, it's actively managing its cash and investments for maximum return. If you are looking for high dividend yield and you are comfortable with some volatility, UPDC Rights delivers. It pays consistently, has a policy to distribute most of its profit, and has recently shown signs of a strong bounce back. It's not as predictable as blue chip bank stocks, but for income-focused investors, it's definitely one to consider. Next up, we have UBA. UBA, or United Bank for Africa, isn't just one of Nigeria's tier 1 bank. It's what they call Africa's global bank, with a presence in 20 African countries and international operation in the UK, the US, UAE, and France. UBA has built a business model that spreads risk and captures growth across borders. Now, when we zoom into UBA's dividend history from 2014 to 2024, we see something pretty impressive. From a modest 0.60 kobo dividend it paid back in 2014, the bank has steadily grown shareholders' returns, hitting 1 naira by 2019, dipping slightly in 2020 with the pandemic, and then bouncing back strong to 2 naira 80 kobo in 2023 and 5 naira in 2024. That's more than 700% increase over the decade. And what's important here is that it's not just random growth, it's backed by real earnings. EPS, which stands for earnings per share, is the fuel behind dividends, and UBA's EPS jumped from 3 naira 20 kobo in 2020 to 21 naira 73 kobo by 2024. That's a massive improvement. But what's even more interesting is that they didn't just give it all away. Their dividend payout ratio in 2024 was just around 23%, meaning they are reinvesting the bulk of profits into the business, which could mean more growth and possibly even higher dividends down the line. So UBA is playing a long game, rewarding shareholders now, but also positioning for expansion. Now let's move over to strategy. UBA earns money from traditional banking, lending and interest income, but also from non-interest income like fees and forex trading. What's key here is diversification. Over 51% of UBA's revenue now comes from outside Nigeria. That's actually huge. It means the bank isn't overly exposed to just one economy, which is especially important when the naira is under pressure or inflation spikes locally. And as a cherry on top, they have gone digital. Their push into tech and retail banking is giving them serious reach, especially among the younger and undeserved customers. That said, no investment is risk-free. UBA still faces usual suspects like credit risk, currency volatility, and inflation pressures. So now, what do we get with an investment in UBA? Well, with an average dividend yield of 22% per annum over the last 10 years, a 10-year dividend consistency record, explosive earnings growth, a low payout ratio which leaves room for more dividend upside, and a truly pan-African strategy that hedges against local shocks. If you're looking for a dividend-paying stock that also plays offense and defense at the same time, UBA deserves a serious spot on your radar. Alright, that's UBA, a bank that's not just paying you, but growing with you. Let's move to the next and final stock on this list, Zenit Bank. Zenit Bank is one of the most recognizable names in Nigerian banking and arguably one of the most consistent dividend payers of the last decade. If you're an investor chasing predictable income and strong fundamentals, Zenit is probably already on your radar. But here's what the numbers are really saying. Zenit Bank has steadily grown its dividend from just 0 naira 60 kobo in 2014 to an impressive 5 naira per share in 2024. That's over 8x growth in 10 years. And the story here isn't just about growth, it's about reliability. Not a single missed year. No cuts, even in tough macro environments like 2016 or 2020. Zenit Bank still delivered on those years. But interestingly, in the last few years is when things got really exciting. In 2022, they paid 3 naira 20 kobo, 2023 they paid 4 naira, and 2024 they paid 5 naira. That kind of dividend consistency, especially in a volatile economy, is not just impressive, it's strategic. For me, if you are building a dividend-paying portfolio, there is no way Zenit Bank does not come into that portfolio. And there you have it, guys, my 4 must buy and hold dividend-paying stocks in Nigeria. If you found this video insightful, do well to smash the like button. Share this video to anyone that will find it insightful as well. And don't forget to also subscribe to the channel and leave a comment in which dividend stock you are likely or you are holding in your portfolio. And don't forget to also, join my WhatsApp channel for you to stay updated with what I am watching in the market and what I am researching about. And with that being said, see you on the next one. Dewo.